we're looking at here is...
See your meme lines, though.
Yeah, man, look at this. So it was following this trend line here.
What would you call that?
It's just a trend line. I mean, and I have the support line here at 9,000, roughly 9,000, which this is where it came from here.
Yeah.
But yeah, I mean, it was following this trend line downwards, and I was thinking it was going to retest 9,000, kind of like it did a couple of days ago.
Mm-hmm.
And this is a 4-hour chart, by the way. But clearly there was a whale that was like, let's start this rally. And pretty much nothing happened after that.
What, this last green candle?
Yeah.
Well, I don't know.
Let me go down to the 1 hour just to see how much.
Yeah, all I see right now are like a ton of BARTs.
Yeah.
A lot of BART action going on right now. And in my mind, that spells manipulation, or not even that. It's just bot trading.
Yeah, it could be.
You know, there's not much volume right now. I think it's because it's a consolidation period. We saw this like when Bitcoin was around 3,000, right?
Yeah.
It was hovering there for months, and there's nothing but BARTs going on up and down, up and down.
Mm-hmm.
You know, so that was an accumulation consolidation period. That's what it feels like right now.
Yeah, I think so too.
I'm not alone in that. You know, like a couple of weeks ago, what did I say? I was a little more doom and gloom, like 2 or 3 weeks ago. Like, look at the daily chart.
Yeah, I mean, you were talking about it was potentially going to go to around 7,000 or something.
No, dude, I thought like for sure, like this was bubble 2.0.
Yeah.
You know what I mean? Like,
oh yeah, this was like a fake out, a fake breakout, and then it was just gonna crash down to like 5,000.
Like if you make it skinnier, like scroll out even more.
Yeah.
Okay, see, when you look at it from this perspective, that looks kind of like, you know, it's too parabolic.
Yeah.
The last time I've seen this happen to Bitcoin was 2017.
Mm-hmm.
You know, and everybody else is looking at this is like, dude, it was a fucking ridiculous run up for 3 months. So I was expecting like at this point to just, you know, kind of keep going down.
Yeah.
Like in 2017, right? It looked like it was rebuilding that same market psychology chart. I mean, if you just scroll out even more, look how identical those two peaks pretty much look.
Yeah, I saw somebody on YouTube. They took like a snapshot of this section here, and they compared it to like a day before or a couple of days before this actual peak,
mm-hmm.
and it matched exactly.
Okay,
but I mean that doesn't really mean anything. I mean, what does that mean?
Well, to me, what do these charts represent? We've talked about this like a million times.
Mass
right?
psychology.
Mass psychology.
Right.
So to me, it means like the bubble psychology is approaching. That's what I was thinking. If it's going to break below, which it did, we called what, like 9,800, that critical support level?
Yep.
I think I said 10.5. You said 98.
Yeah.
Regardless, both of our targets got crushed.
They did.
And it went down to how low? Like 91?
9,100.
There you go. So my thinking was, dude, like that was the make or break moment. Capitulation was going to set in. People were just going to panic, sell off, and we're going to see like 7K. Remember when Maddie made that tweet? He's like, how low do you think it's going to get in the next 3 days?
Yeah.
I think he was like as bearish as I was because he predicted like 7,900 or something like that.
Yeah.
But it didn't happen. It rebounded, and now it's like consolidating. It's really boring right now.
Yeah.
It's like no volume, you know?
Yeah, I didn't really think it was going to go down below 9,000 simply because we're getting too close to the halvening. And even though I think once we get to the halvening, the price is not going to do a whole lot. But I mean, we're getting to a point where in Bitcoin that we're not mining a whole lot of Bitcoins anymore, right? We're going down to 6.25.
Yeah.
And so at that point, the price starts to stabilize at that point, just because it's more rare. But
I wouldn't say it's going to stabilize, but maybe become a little less volatile. I think we're going to see like those huge up and down swings for a while.
Well, yeah, I think so too. It's just we're not gonna see $3,000 Bitcoin anymore.
Ever again? You're calling it?
I'm calling it.
That was it, huh?
I think the lowest we'll see is like 6,000 or 7,000, and that's
I think around 7,000.
Yeah, I think that's the lowest we'll ever see it.
Yeah, it would be like a slow trickle too.
For sure. It's gonna take like 18 months to get to 7,000.
Wait, what?
Well, once it peaks at roughly what we're predicting at 100K plus or minus. Once it peaks, then it's gonna take like 16 to 18 months, all the way down to 7,000.
So you're talking about like after the next big.
Oh yeah. I'm thinking in a two year kind of lifespan.
I think it's gonna hit 7,000 probably in like a month.
Oh
or two.
Hell no, dude! No way.
What do you mean? Do you think like this is the absolute bottom right here at 9K?
I I think the lowest it will go, worst case scenario, like in the most bearish view, 8,400 is the lowest it'll go.
But even 7K is not that bad, you know.
No, it's not. It's not.
What did it hit? 14K, so 50% correction.
Yeah,
which is a little out of the norm. Usually, like I said, in 2017, everyone was always preaching this like 30% was like the magic number.
Yeah,
you know, when people traded Bitcoin, you're like, just wait for that 30% correction, and then you buy in.
Yeah,
it's
exactly.
It's like automatic. It's always 30%.
Exactly. Yeah, in this case, it went to 40%, but
yeah, but who gives a fuck?
35%.
Nobody really knows, right?
Yeah.
Like these are all these are hokum rules.
But you say all the time, don't trade Bitcoin, right?
Yeah. No, do I say don't trade Bitcoin?
Like, don't day trade Bitcoin.
Yeah, I just say don't trade, period, man.
Yeah.
Because it's not an easy game unless you have like a serious, solid handle or like understanding of this stuff.
Yeah.
Yeah, because this market is incredibly unpredictable.
Yeah, and the way that I look at it is long term. And if we do think that it's actually going to hit close to 100K, then it's better to start accumulating now for that point. And then if we do reach that point, then, you know, exit at that point. And then wait for it to go back down to 10,000 or 9,000, which will take 12 months. Just like it took 12 months to go from 20K to 3K.
Mm-hmm. Yeah.
Yeah, wait for that cycle again and just accumulate more.
What did we? But I think we predicted like in episode fucking 7 or something like that.
Yeah.
A few months back. We were talking, or at least me in my mind, when this next fucking, whatever causes it, the next big repeat of 2017, essentially.
Yeah.
Or the peak of the next bubble cycle, I'm thinking like 250,000 is what it's going to be.
Oh, you think so?
Yeah.
I'm a little bit more conservative just because, I don't know, 200,000, seems high.
That's
dude.
what?
Why
does that seem high, dude?
I mean, because previous predictions before we were reaching 20K, it was going to reach up to $10,000 and it doubled.
Exactly.
But
So
in this case, doubling from 100K to 200K, that seems like a lot. That's why I'm thinking it might go 120, 150 maximum. Like, that's the point where all the whales will be like, yeah, I'm good. I'm done here.
Yeah, I don't know. There's no way to predict it.
Yeah, there's no way. There's no way. That's why you should have a strategy to exit.
Yeah, exactly. You take profits along the way, I think, is the safest way to do it.
And one strategy that you guys should look up is Chico Crypto. He has a pretty solid strategy like an exit strategy that kind of starts right now. So as soon as it reaches 20K, you exit 10% of your portfolio.
Yeah.
Then 30K, another 10%. 40, 50, 10% all the way to 100K.
So what do you do with the funds whenever you're taking your 10% out?
You should definitely watch that video. It's pretty good because what he does is he converts his crypto into a stable coin, DAI. And then he uses DAI for loans. And so he makes interest off the DAI that he has.
For loans?
Yeah. And he makes like interest like between 6 and 15% interest.
What do you mean? Like he's like personally loaning out his DAI to people? Like
it's through some program, some app that you can loan out. MakerDAO.
Yeah, MakerDAO.
Yeah.
But I thought like, oh fuck.
So
now I gotta remember all that shit again.
Yeah. So it's basically just a way instead of converting into fiat and putting it into a bank account that's going to yield 0.01%, which is nothing. Then just keep it in crypto in a stable coin and DAI specifically, and use DAI and MakerDAO to do that loan that we were talking about.
So if he's holding DAI, he's getting MakerDAO tokens, right? He's not getting DAI. Like the interest that's getting paid on his, because he's basically lending people. Because the purpose of the MakerDAO,
I think we established
project is for
avoiding paying taxes on.
Well, that's a huge
not
bonus,
in
right?
a nefarious way, but in a kind of an intelligent trading kind of way.
Yeah,
because if you want to purchase something with crypto, I mean, typically you have to convert into fiat, which then you have to pay taxes on that conversion, and if you want to not avoid paying taxes, then you just keep it in DAI. Turn into MakerDAO, take out a loan.
We never established if that's a taxable event or not. We don't
True.
really know.
True, but
you know how the taxes work here, right? We've been over that
times.
Like any time you go from one crypto to another, that's a taxable event.
True.
But why did we? For some reason, I thought like that's a loophole because it's a stable coin, right? No, but like even if you cash out your Bitcoin to Tether, I think that's a
It's a taxable event. Yeah.
So the DAI should.
So I guess at that point, yeah, I guess you would have to pay taxes on that.
I don't know, dude. Like a few weeks back, whenever we went over MakerDAO, like I had way more insight. I guess it was fresh in my mind, right?
Yeah.
But so that's his strategy. His profits, he puts them in the DAI.
Yeah.
I guess you want to watch it?
Yeah, we can pull it up here.
Let's just check it out.
It's called Chico Crypto and then exit.
Yeah, we're like fanboying this guy nowadays, dude. We talk about him a lot.
He brings up good points, man.
Yeah, he's got a good YouTube channel for sure.
Here it is. $1 million cash out plan.
I wonder if that was his car. I don't think so.
Hey, yo, good evening, viewers of the tube.
Oh, actually, well, I'll just summarize it for you because I don't want to, steal his thunder.
What do you mean steal his thunder?
Basically, you know how YouTube takes it takes a lot of if you're taking stuff from YouTube and you're not attributing that resource, then like they get takedowns and all that, and you've heard about that,
so
right?
So what, like if we watch this video, it could hurt him?
Well, not necessarily. I mean, we can do commentary on it, but it's not. I don't know. It's probably not the best idea to just like straight watch it.
Don't you just like credit him like like what we're doing? Like,
well, yeah,
this is his channel, Chico Crypto. This is what we're watching it, and then if I guess I see what you're saying, because like if people are watching us and we're watching this, like why would the fuck would they go over there?
Right.
Because they already watched it through us.
Exactly.
So it's like we're taking views away from him.
Exactly.
Yeah, I could see where that'd be an issue.
So I want to get to the point where he talks about like that. Here it is.
Plan to once again cash out 10% of my portfolio in the same manner.
So here he talks about cashing out at a $20,000, 10% of portfolio. Half of it is Bitcoin. The other half is altcoin. And so he talks about going all the way to the top. At the very top, I think he keeps at 100K. He cashes out all of altcoins. And so this is just one strategy to think about when once we start getting closer to.
Well, yeah. It looks like up along the way he's just taking out altcoins. Okay.
And so here at the very top, most of it is just altcoins.
Yeah.
And so at the very top is half Bitcoin and half altcoin.
Just 10% though.
Mm-hmm. Which
What the fuck? Why am I coughing so much?
So yeah, total here is 90%. So he's keeping 10% in crypto. He's just keeping it.
Well, no, because that's 9 of them, right? 9 blocks.
Yeah, that's 9 blocks.
But it's 90% of his altcoins essentially, or no. 10%. Oh my god. Okay, 1, 2, 3, 4, 5. So that's 60% altcoins right there.
Yeah. 60.
Plus another 5%, another 15%. That's 75% of his altcoin portfolio suctioned out or siphoned out, and then he pretty much 15% of his Bitcoin holdings, I guess.
Yeah.
Right? I don't know.
So it depends. Like maybe most of his bags are altcoins, and that's why it's like this. So this is just an example of
I don't know.
Of like a strategy anyone could take and modify.
Basically, yeah, what you're saying is it's not smart just to like hodl.
Yeah, hodl and wait for 150K or 200K. That may not even get there. That's what I'm trying to say.
But even if it does, you just keep on hodling, right? And then you ride the wave all the way back down to 10. Well, what happened to the majority of people last
But you want to
time.
avoid that though.
Yes, that's so it's smart to take little nuggets here and there, right?
Yeah.
But a lot of people don't want to do that for tax purposes.
Yeah.
One.
Yeah. But the thing is,
that's the thing that kind of like slowed me down a little bit.
Sure.
Taxes, man. Like I already took out. I'd say like I took out whenever I recognized like the bubble was here.
Yeah.
Like the bubble popped. Like in January 2018, I was like, dude, I need to get the fuck out. I cashed out as much as I could, which was like 30% of everything I had.
Right. Right.
And then I realized like I calculated all the taxes and she was like, God damn, dude, I owe so much fucking money. So I was like, I made a decision. Like, you know what? For what I have, what I'm holding on to now, because at the time it was still pretty valuable, and it wasn't like 100% certain. Like, the bubble was here.
Yeah.
Like, I didn't think it was gonna get as low as it got.
Right.
Hindsight's 2020 now. But anyways, so my thinking was, whatever I got left into crypto, I should just hold it for more than a year, so I could avoid these short-term capital gains taxes and stuff like that.
Yeah, absolutely.
But it bit me in the ass, right? If I would have just said, fuck it, cash it all out, and pay that 40% tax, I still would have been,
Reasonably good.
well, better than where I'm sitting today.
Yeah.
You know what I mean?
Yeah, yeah.
But it's just a higher tax burden.
And the other thing that Chico Crypto brings up too is that he has a portion of his exits into a loaned out DAI.
See, that's interesting.
Yeah.
I mean, it's just he's diversifying a little bit.
Yeah.
Yeah, and he's getting some kind of residuals or some kind of passive income from that. I just don't know how fucking sure, like, is he actually making a return? Like it.
Yeah, here it is. So checking account, savings account, and a money market. And so let me play some of this.
0.09% and 0.16%. When you deposit US dollars in the bank gets to take those dollars and lend them out with high interest rates. And then you get back just a fraction of what they earn on those loans. It is a really sweet deal for those bankers who make out like bandits, while the consumers' balances earn dust. But the DeFi infrastructure that is blossoming from cryptocurrency is giving us other options. If we check out the website loanscan.io, we can see accumulation of the lending and borrowing options with different stablecoins in the DeFi ecosystem. As we can see, DAI is a stablecoin with the furthest reach, being on every platform.
Okay, hold on.
Yeah, let me go back here.
These are the lending platforms
Yeah.
that you were talking about.
Yeah, exactly.
Because I'm like, who's he? He's not going out there and like
knocking
on doors like, hey, I got these DAIs here that I can
for a
loan
loan.
to you. Like,
No.
There's an actual infrastructure in place that I'm not aware of, right?
Yeah,
It sounds
and
like.
so here, for example, in Compound V1, Compound 2, Maker,
Okay, I know
Dharma.
Maker. I don't know any
So-
of the other ones.
so all of these are loan platforms, right?
Okay.
They're not like the
They're all
scam
they're all-
platform like BitConnect.
Yeah. I'm assuming they're all dApps,
I would think so.
probably all on Ethereum, I'm guessing. I don't know.
Yeah.
Okay.
And so you can see how much percentage you can earn. I mean, we're talking about 10 to 20% here.
Is that what those green and purple lines are?
Yeah.
Okay, earn 6.9. Let's say Maker. What the
So
fuck is
Maker doesn't, I don't know why it doesn't have anything there.
Really interesting.
So maybe it's the 17%
So
here.
when you borrow, when you borrow, you that's the interest rate,
Mhm.
17.5% for Maker,
Yeah.
which is pretty fucking high.
It's very high.
Well, that's because Ethereum is so low.
But here's the thing. It's high because not because people are I don't know. I don't want to say that they're just trying to take your money, but it's high because you don't have to deal with the banking infrastructure, right, with these loans. You don't have to get a credit check. It's basically a high interest loan. It's your risk, and a lot of these cryptocurrencies are locked in a smart contract.
Mm-hmm.
And so the value here is not necessarily that you're getting a good deal on a loan, but the value here is that you're not dealing with the banking infrastructure and you can still get out a loan.
Yeah, but this interest rate is always fluctuating based on Ethereum, I think.
Based on Ethereum, but also the
Because that's-
MakerDAO decision, right? The voters.
Yeah, that's what they because the only thing they have is collateral or people's Ethereum. So if the value
true.
of the collateral keeps going down and down and down,
That's
which
true.
it has lately,
Right.
it went from like $320 to $200 like over the last month.
Yeah.
It's a pretty big dip. That's like a 30% loss in your fucking holdings, as a
Yeah, and
as
with
a financial financial holdings company.
and with any kind of investments, I mean, this is sort of like an investment. You're loaning out your own money to gain interest, right? To earn interest.
Yeah.
So what you do is, let's say you make $100K in this bull run, right? $100,000. You probably don't want to put all $100,000 in DAI for loans.
Yeah.
Right,
Yeah, of
that's-
course not.
You probably want to put 20% or 30%, something like that. That way you're not taking all the risk in these loans. But that 20%, that $20,000 is earning you, roughly 10%, give or take. So that's reasonable.
I just wonder how much of that 17.5% like goes to the lender, like in Chico.
Yeah.
And that's what I'm curious about. Well, the other ones seem pretty good. It's like, I don't. It's a Dharma is like a 50-50 split. No, yeah, it's like the lenders get 100% of
the interest. Yeah.
Huh. Interesting.
I'm sure they make their money some other way.
Yeah, but regardless, his point is it's better than it just sitting in a bank or something like that, where you're getting fucking fractions of a percentage.
Yeah, and then the banks are taking your money and loaning it out and making a lot.
Yeah, but like you said last week, dude, that's good for us, right?
Well, it's good for the economy because that's the rules that we're playing by.
Yeah, that's what you were arguing last week about Libra. That if Libra becomes an actual thing and people prefer it over traditional finance banking industries, that's gonna put a huge hamper in what'd you call it? Fucking fractional reserve lending.
That's right.
Shit like that.
That's right.
Which is kind of like what our whole world runs on, I guess. I don't know.
Yeah, about probably 95% of the world uses fiat currency, fractional reserve banking.
There's tons of borrowing going on, dude. Like people need loans just to get their
and like I mentioned in the last video, with the act of borrowing is the exact same act of generating new money. And so if you're not generating new money, then you're slowing down the economy, and therefore you have these collapses.
Yeah.
And so, I mean, we're technically...
So this is another thing.
We're contributing to that by using this.
Yeah, that's what I was about to say. This is another thing, not just Libra, but like this whole... this is like a movement that's just starting to the whole decentralized finance sector.
Yeah.
I think like Ethereum is sparking a lot of this, but it's not something that's obviously widely adopted yet. Still like an experimental... What do we call it? Experimentation phase?
Yeah, yeah.
But... Fuck, man. Think about it, man. Think.
To me, it's a better proposition than putting into a bank account.
Yeah.
I mean, you're still paying taxes anyways, right? So it seems like if you can earn money, then that's the better route to take. But again, this seems like a risk because somebody's taking that loan and doing something with it. They could easily lose it too.
Yeah, you mean like the borrower?
The borrower, correct.
Yeah, so that's what we always talked about when we're talking about MakerDAO and all this stuff and DAI.
Yeah, like
where's the collection process, right? Well, right now it's easy, I guess, right? Because it's Ethereum. It's a smart contract, right?
Yeah, it's a smart contract. That's another thing. We do need to like dig deeper into MakerDAO just so we understand like the both sides, the loan and the borrower.
Yeah,
because I want to see like if I'm borrowing $100,000 in DAI, like what is that? I guess I have to give up some collateral in order to do that.
Yeah, isn't it like 150%? Like if you're borrowing 100,000 DAI, you need like $150,000 worth of Ethereum as collateral.
And so if I default, then I still the loaner still gets 150%.
The loaner they just yoink your shit, don't they?
Yeah,
just
basically.
Like a bank does?
Yeah.
So it's kind of like you're locking your Ethereum.
I mean, that seems like a pretty safe bet as a loaner.
As a loaner?
Yeah.
Yeah, I guess, because it's a fucking huge, dude. Like, that's a huge...
that's a huge...
collateral. That's
a huge collateral. Yeah.
So, yeah, the thing...
It's liquid collateral. It's not like a piece of land where you got to go and figure out how to sell it.
Yeah. Yeah. Fucking A. I think the thing that stumped me the most is like, why are people putting forth 150% of their Ethereum to get 100% back? It's like, why don't they just sell that 150% worth of Ethereum?
Yeah, there's got to be something that we're missing here. It has to be.
Yeah, I feel like we're just
otherwise
not
like
financially inclined or something. I don't know.
Think about
it's
it.
Not
if it requires 150% collateral, and it's not a system that actually works, right? Why are there competitors?
Yeah, exactly.
You know what I'm saying? Like,
yeah, I did. This is the first I'm hearing of all these other ones, and I'm pretty sure that's not it, right?
Yeah, I'm sure there's a lot more than this. And maybe there's more scammers. Maybe some of these are like BitConnect, but BitConnect was something else, man. It wasn't like they called themselves a loan platform, a lending platform.
What? Do you know how it works? Did you?
Well, basically what they would do
is
just
like put your money in.
You put your crypto in,
yeah,
and they're supposed to return you some percentage of that crypto.
Okay.
And the way they return that percentage is by trade bots or smarter people than you.
The fuck, their secret sauce.
Yeah, their secret sauce that they say that they can make more money with your money.
Yeah.
And so let's all make money together.
So it's not really like a lending platform. It's more like
Well, and not only that, it was also a Ponzi scheme. So the
Yeah.
way that people got paid is by getting more people into this scheme.
okay, yeah. So you're saying these have none of those red flags
Yeah.
that we're aware of.
As far as we can tell, I mean, we haven't done research on all these quite yet, but
No, it sounds like like you said, it's there's not much different than what a traditional lending agreement.
yeah.
Only thing that's so fucking mind-boggling is how because this whole thing is decentralized, right?
Yeah.
Who makes decisions? Like you said, there's a governance. The MakerDAO platform is all where they make all the decisions.
Well, I think, yeah, the MakerDAO kind of group or the decision makers, the voters of that,
Yeah.
they decide on what the interest rates are. But when it comes to a person defaulting on a loan, it's all based on a smart contract. So if you don't fulfill the smart contracts kind of like laws, if you will, then you lose your collateral, and that collateral goes to the loaner.
Yeah.
Right, it gets split up to the parties.
Which is fine. That's the way it works today.
Yeah,
There's
pretty standard.
Nothing crazy about that. That's you borrow some money. There's some juice attached to it. You pay the juice.
Yeah,
and
it's
that's
like
it.
getting a home second mortgage.
Yeah.
Right, you take out a loan based off the house, and you use that loan to start a business or whatever. That business fails, you still owe that money.
Yeah.
Right, then you can go bankrupt and take a hit to your credit.
So, but this is cool. So, so by you buying DAI with your profits, you're essentially, you become a virtual loan shark in a way.
Yeah, that's true.
Which is pretty cool.
You're taking everybody's like 50% extra
Yeah.
off their liquid crypto.
But that's what everybody wants, right? Passive income, dude. That's like the biggest boner when it comes to finance for me personally.
No, absolutely,
You know,
absolutely.
like everybody dreams of like, sipping cocktails on the beach and shit, and you're just raking in dough,
your
dude. You don't
account
have to do
keeps going
shit.
up. Yeah.
Yeah. So this is one path, I guess, a little minor one. You're not going to make a killing, I don't think, but I don't know. Yeah, I got sold on so many different like airdrops for the longest time. I thought was going to be a source of passive income.
Yeah.
Because the way it was shilled to me, especially by EOS.
Yeah. Not only that, you have to have a lot of coins in order to get reasonable airdrops.
Well, I had a lot of coins. That's the thing. That's why instead of cashing out those coins for fiat, I held on to those coins because of the airdrop promise. But the way they made it sound like is this is going to be a constant flow of like airdrops, dude. I thought it was going to be passive. In the first few months, it was like a nice little, I was making, like $3,000 here,
Yeah.
$4,000 here. But they're like big popular projects. But then like once those like dried out,
Yeah.
everything afterwards is like
Well-
bones. It's like they're dropping fucking just
I wonder what it
seashells.
was. I wonder what came first. Was it the price in Bitcoin going up, or the ICO mania in like Wild West of the ICO? Was it just a coincidence that it happened at the exact same time? Did they support
no.
each other?
Yeah, that's what I always say. Because you're in the camp that thinks that
That the price went up because of the halvening and like the
Yes.
cycles and all that stuff.
yes, like
yeah.
Bitcoin is controlling everything. It's just like a natural rhythm, a cadence that the market
Yeah.
follows, right? Bitcoin is the dominant, is the big beast. But I think in 2017 was the exception. I think, because the mania wasn't surrounded Bitcoin. The mania was
ICO.
ICOs and
How much did they raise? Like 100? Was it
who?
$9 billion in ICOs?
Something like that. But yeah, so all these new projects were popping up.
Yeah.
Everyone was talking about that, But yeah, Bitcoin, of course, had the dominant, volume just because it's the on ramp to the whole space.
Mm-hmm.
You know what I mean? And once the normies came in,
Yeah.
that's all they heard about. The normies weren't buying ICOs.
Right.
You know what I mean? Like they came in to buy Bitcoin. That's what drove Bitcoin up, I think. But
Yeah.
so I'm a little skeptical, a little bit. Like I understand your points about how halving's coming. There's gonna be a run up leading to that, like it always does. Then there'll be a sell off post halving.
Yeah.
But then I'm thinking, what the fuck is after that? Like, what's gonna drive the price up after the halving? There's nothing. And, like, ICOs are done, and IEOs. I mean, they were cool for like the first few weeks.
Yeah. A couple of weeks. Yeah.
Now they're fucking straight trash, dude.
Yeah.